Welcome back everyone to another video, and today's going to be episode 3 of our backtesting the ICT silver bullet model. And in this case, we're going to be trying out actually a different currency. We're going to be looking at Euro USD. And in terms of the hours we're going to be looking at, it's going to be from that 3 to 4 in the morning, that London session. So if any of you guys trade during this session, I hope with this backtesting video, you guys are going to be able to see, maybe setups that you might not have seen or how you can frame a setup going into that specific session. And just a friendly reminder for you guys, I did just make a Discord. Go check out the description below and join. It's completely free. And, that way I want to build a community around this so that, everyone can start sharing their trades or whatever they're doing, share knowledge and really grow together as a community. Alrighty, so getting right into this, just as a friendly reminder, I'm on the 15-minute chart. So the way I do it is I use just the 15-minute and the 1 minute. That way we're able to quickly go through really all the sessions that we're looking for and frame a setup on the 1 minute. And I'm also going to be utilizing the midnight open and as well as the 3 a.m. open for the power of 3. So let's jump right into this, where I'm going to be starting on the first week of August, and let's see what we get. So here we have Monday's price action. As we can see here, here's that minute opening price. And as we always do, we're going to mark out that 3 a.m. opening price to see if we could utilize that ICT power of 3. So first, identifying some liquidity levels we could have looked at going into the day. We have these equal lows here. There's going to be sell stops below here as retail is looking at this as some sort of support level to see price going higher. So what does price do before going higher? We take out sell stops right within that session, just a little bit before it, and then we see price head higher. And your draw for price could be the current day high, or you could also take your Fibonacci tool and use the standard deviation that ICT always mentions. And we also tapped into this 15-minute bullish order block. And I always talk about how if you utilize multiple PD arrays when you're trying to frame a setup, it really helps in giving you more confidence within your setup. So you're combining the sell stops that we've taken, which was right here. Price is in a discount, remember, because you're below that minute opening price. And you also combine the 15-minute bullish order block as well. So you have 3 factors already working in your favor for taking this higher. And here we're on the 1 minute. In terms of how I would frame a setup, like I said before, my obvious draw is going to be these equal highs up here. Retail is seeing this as some sort of resistance, as there's going to be buy stops residing above these highs here. And then in terms of how we would frame a setup, now I do like how we displaced up higher here. I really like to see this. This is like a train. Especially above a previous high, you want to see this amount of strength, because this is telling you that it's like a train moving really fast and saying, get out of the way, move. And on these type of moves, you're just looking for that fair value gap entry. Ideally, I'd want to see price get a little bit more of a discount or maybe some sort of pullback. But again, these stay open as breakaway gaps, which is totally fine. And then we fill this fair value gap in here. So this is your possible fair value gap entry right here within that 3 to 4 a.m. entry. And something else to note is that we have a multi-PD array entry, as we also have an inverted fair value gap. You always want to see if you have multiple PD arrays working within your favor. In this case, we have the regular fair value gap, which is the blue one. And then we have this inverted fair value gap right here, which is the yellow one. And we're going to see this stay open as a breakaway gap. Like I said, you want to see bullish order flow. So ideally, you don't want to see these get filled. So we see price come down. And something else to note is that this is the close of the 250 to 310 macro, as right here on this candle is that 310 macro close. And then we see price trade up higher. And then from here, it would just be up to your own liking, as if you want to keep holding it up to this high here or take it higher to that 50% standard deviation that we mentioned earlier. But we have, like I said before, we have this fair value gap. Remember, wicks can be gaps depending on where they are. We have the gap, and in addition, we also have this bullish order block as well, as we can see here. And we have another order block with also a BISI here, this large BISI that we can also treat it as a breakaway gap, as we don't trade below that 50%. So you want to make sure that you're utilizing these multi-PD array analysis within your trades, because you have the fair value gap, you have the order block, we trade up displacement, you have a breakaway gap with an order block, as these 2 down close candles were engulfed by these 2 up close candles. We see price trade down, consequent encroachment with the order block, and then we see price trade higher. And ICT talks about how you can utilize the mid hour. So for example, in this case, it's 3:30. You want to be careful within about 3:30 to 3:35 within that range, as there's going to be some profit taking happening. So it wouldn't be just the macros, it's also that mid hour as well. But as we can see here, if you did hold through the macro, you do have 350 right here. You can get out just below with your stop loss being below this low. It's totally fine. But all in all, this Monday, it was a very clean trading day for that 3 to 4 a.m. session. So again, here we're on that 15-minute chart. And again, I'm below midnight open. So really the only thing I'm looking to be is going to be a buyer. And like I always say, the process is to mark that 3 a.m. opening price to see if we can get any double premium or double discounts going in for the day. And as we can see here, based on where price was, we are below the 3 a.m. opening price and the midnight opening price. So the only thing I was looking for was to be a buyer in this area. And something else to note is we have an inverted fair value gap with a regular fair value gap here. So you have a single pass down, single pass up, treating this as a BPR. And if you draw that out, you can see here that price is respecting the consequent encroachment of that. So here we are on the 1 minute, and a possible easy draw I'm looking for this buy is going to be these really clean highs up here, as retail is going to be looking at that as possible resistance in price. So there's going to be a lot of buy stops residing above these highs up here. Unfortunately, though, it looks like we weren't able to get any kind of buy set up here. I did like how we also kept taking more sell stops within the session. That just shows me a larger willingness for smart money to accumulate longs below that 3 a.m. opening price. But from the looks of it, it happened outside of that 3 to 4 a.m. window. Of course, if your model permits it and you are flexible, you can possibly get in somewhere along within here or here. But again, as we can see here, with those trades that happen outside of them, you have to be very careful. Especially you have to follow the rules, and especially in this case, we're backtesting specifically that 3 to 4 a.m. session. So if there's no entries there, we're just going to go on to the next one. And here we're on Wednesday's price action on that 15-minute chart. And like I said before, we are below that minute open. The only thing you're looking for is going to be buys. And an easy draw without even going down to the 1 minute would be this trend line here. Already I'm seeing an area where retail is trying to sell. As you can see here, price even taps into this, and I would even bet that later on it does take it as well. And in terms of the 15-minute levels that I'd be looking for to support this analysis going up higher, we have this 15-minute bullish order block right here. And the next thing we're going to mark out is the 3 a.m. opening price, so we can utilize the power of 3 from ICT as well. And one last thing to note is this order block here that we also have on the 15-minute as well. Something else to note is that this is a low resistance liquidity environment. As we can see, price, once it starts to get above all these chop up here, we see massive speed getting into this inefficiency here. So looking at possible draws, like I said before, I like these equal highs here. It looks like we did take them and we came back, but it's still rather clean. So I'm looking at this as another, again, an area where retail is going to be looking to see this as possible resistance. So there's going to be buy stops residing above these highs right here. But remember, our main target is targeting that trend line where retail is trying to sell that trend line specifically. And how you could have framed the setup during that 3 to 4 a.m. ICT silver bullet model. Right away, I'm already seeing a multi-PD array entry as you have a bullish breaker because you have a low, high, lower low, higher high. And these up close candles right here are going to be your bullish breaker. So here's your bullish breaker here. We see price tap into this. And remember, we also have that 15-minute bullish order block. And something else I'm noting already is we have another order block within an order block. So as you can see here, this down close candle here is engulfed by these two up close candles. So we're already getting hints of bullish order flow within the marketplace because we're seeing multiple PD arrays at once working in our favor. Now, let's say you weren't able to get into this entry here with the breaker and the order block. You can also get in with this fair value gap. And remember, you are buying below minute opening price. And you also have this fair value gap with a multi PD array entry, which is that volume imbalance right here. So you have the volume imbalance here and you have this large BISI. We're treating it as a breakaway gap in this case because look at how price is respecting the consequent encroachment of this BISI. Now, in this case, it has to do with that volume imbalance because you're combining two PD arrays together in one, which is going to give you more confidence within this trade specifically. We then have also a mitigation block as this high right here was simply traded up with one candle, and we see price trade back up into this, retesting it twice, and then we trade higher as well. Something else to note before we continue analyzing is if you note on your chart, this is also the close of the macro. So remember, you want to be very careful when dealing in the market with the macro open, macro closes, as well as the half hours. In this case, from that 250 to 310 macro, look at how the entry was just before the macro closed, and then we see price trading higher. Something else to note on your chart is that we also have a bullish breaker because you have a low, high, lower low, higher high. So if you guys take the up close candles and you draw them out, look at how price is respecting that bullish breaker. Look at the bodies. That's what you want to see if you're looking for bullish order flow. Something else to note is how you also have a bullish order block as well. So again, it's like I always talk about, if you're able to couple multiple PD arrays at once within your analysis, it will give you more confidence holding trades longer because for example, if you were to violate this PDA rate, it might not be necessarily a trade that you might want to be holding, maybe put a tighter stop. But if price actually has bullish order flow, you want to see bullish PDRAs get respected, like this bullish breaker that we had here and this order block as well. We see price trade higher, and in this case we also have another breakaway gap in the form of a BISI, because we don't trade below consequent encroachment of this BISI here. And a reason for this could be because these two down close candles were engulfed by these two up close candles. So again, price, why would it pass? For example, in this case that we're seeing here, price won't need to reach downward into consequent encroachment of this large breakaway gap because it has these two order blocks that it's interacting with first. We see price trade higher, and also we have a BPR, single pass down, single pass up. That's a balanced price range, and you also have an inverted fair value gap coupled with a regular fair value gap. We see price get traded up one more time, and also this is something really to note on your charts. So I want you guys, again, focus on those macros. What time is it right here? 350. Look at how price retraces right at 350. So for any of you guys who are, let's say you went long in this position here, again, trail your stop losses, be careful. Don't put it too tight, but just be wary that during these macros, you're going to see a lot of profit taking, which in this case, as we can see here, price does retrace. And we also fell a little bit short of that trend line, which is fine. But again, a very handsome trade, as we can see here. You have the breaker scenario that we talked about, coupled with that multi PDRA analysis, making our way up higher. Now here we made it to Thursday's price action, and again we're back on that 15-minute time frame. And the only thing I'm going to be looking for during that ICT silver bullet 3 to 4 a.m. session is going to be sells, as we are above that midnight opening price. And we're going to mark out that 3 a.m. opening price to see if we can utilize the ICT power of 3. And from the looks of it here, I'm noticing that price is trading within a deep premium and taking buy stops along the way. This is what you want to see, especially leading up to the session that you're looking to trade. So you see these really clean highs right here. There's going to be buy stops there because again, retail is seeing that as resistance, and we see price continue to take buy stops leading up to that ICT silver bullet model. Something else to know that you guys probably noticed already is that retail is buying up this trend line right here. So there's going to be sell stops all below these lows right in here. So I'd be looking at as a possible target to see if we could see price head lower. And here we're on the 1 minute chart for this day. And from the looks of it, it looks like price action wasn't really clean on the lower time frames. I do like how we left these equal lows here. That's definitely something that I want to leave marked out. But unfortunately here, it looks like price retraces once again right at that macro, taking out anyone here trying to chase this short. But seeing as to how you could have framed the setup going into this day, maybe possibly taking this short all the way down below to midnight opening price. I like how we also have a bearish breaker. In this case, we have a high, low, higher high, lower low. So this last up close candle, you draw that out. Look at how price respects that right there. And not only do we have a breaker in this case, we also have a volume imbalance right in here as well. And you could also say that this is a order block, as these 3 up close candles were engulfed by these 4 down close candles. So you take the bottom end of that order block here, you draw that out, and that's going to be your bearish order block on this 1 minute chart here. And again, the entry always keeps repeating in terms of the time ranges of when you're entering, as here is the 310 macro close from the 250 to 310 macro. We see price trade back up into this order block here, as well as the breaker volume imbalance. We then see price trade lower, pulling back into the bearish breaker as well as the other PDRAs that we noted out, and then it begins to trade lower. Now, this day wasn't really clean. It wasn't a day where, it wasn't like a Wednesday that we had. So ideally, you probably want to be really careful going into this day, maybe put a tighter stop loss. Just because you really by around that 320 to 315 time frame, you already want to see price, reaching those targets that you've originally had. But then again, we do see price still continue to respect and finally reach below that midnight opening price, as we do have this bearish order block right here, and we have this larger fair value gap, and then we trade lower. So all in all, it wasn't very clean. Like I said before, most likely you either want to be skipping this day, or like I said, look for basic low hanging fruit. Maybe take your trade up to here, maybe partial stop loss above the last high. As you notice here, like I always say, look at the macro. That 350 macro starts, it's going to be profit taking hour. So they're going to take out buy stops of anyone here trying to go short. And then we see price trade lower, taking out, remember that trend line that we talked about earlier. So here we are on the last day that we're going to be working on for this week. We are on Friday, and right away from the looks of it here was a selling day. And again, the only thing you are looking for is to be a seller within that ICT silver bullet model, as you are above the midnight opening price. We're also going to note the 3 a.m. opening price like we always do, to see if we were possibly able to get a double premium in this case, because we're above the midnight opening price and above the 3 a.m. opening price. In terms of this 15-minute chart, in terms of the PD rays that I'd be looking for to see price interact, I do like this level here, as price could be reacting this as an inverted order block. Couple that with an inverted fair value gap as well. And here we are on the 1-minute chart. And in terms of some easy draws that I'd be looking for to target price on this day specifically, right away I'm noticing that we have a possible market maker sell model, as we have consolidation, large consolidation here, and then we trade price up higher, and then we see price get sent lower, tagging anyone trying to chase this price going any higher. Some easy targets could be, again, these little consolidation points where they have these really clean lows. So as we can see here, retail is going to see this as well, like we always talk about. It's going to see it as equal lows or support. So there's going to be sell stops residing below all these lows right in here. Now zooming in here, it looks like we did have a little bit of chop. How you could have possibly framed this setup right away, I do like this opening gap here that we had from that 306 to 307 candle. You draw that out on your chart. And something else to note is that you also have a breaker, which in this case is high, low, higher high, lower low. So this whole range is going to be that bearish breaker, which price does respect. Now we did get quite a bit of consolidation in here, but I do like how we respected the bearish order blocks, as we have one here, and we have this main one here that price continues to keep respecting going in within this session specifically. And something else to note is we also have these equal lows here, and retail is going to be having those sell stops below these lows. So really, again, you want to be holding through all this, possibly keeping that stop loss above this high, or if you entered right after that macro close, you could put it right above this high specifically as well. And if you waited to the mid hour, you can see volume finally kicks in after reaching that mid hour. And right away, I'm also seeing a possible PD array for another entry. If you waited, let's say, for example, waited to see price exit this consolidation, you can easily wait. You have a fair value gap right in here, which it does trade back up into. But again, if you were to keep your stop loss right above this high, it wouldn't take you out. And price keeps showing us signatures in price where we're seeing equal lows on the way down every time. It's just struggling to keep going down. As remember, it is Friday. That's something else to note. So price action won't be as clean as it usually is, let's say on a Monday or a Tuesday. Something else to note within this area as well is we have an inverted fair value gap, which also supports a re-entry maybe here, or you just stick with this entry as well. And then again, we see price finally trade lower, targeting those equal lows that we had back in the original consolidation. Now, in these kind of scenarios, like I said, again, price is moving rather slowly, and you also have the macro starting here at that 350 to 410 macro. So you also want to be careful, as profit taking will happen there as well. But again, if you kept your stop loss right above that original high, you can definitely hold that down lower back to this original target that we were looking for, as I stated earlier. So all in all, not the cleanest day, but again, it is still viable depending on how you want to frame the setup. You can enter on volume imbalances, you can enter on fair value gaps, breakers. I don't really enter on order blocks, but I'd highly recommend you utilize more the breakers and fair value gaps as being your main points of entry. And again, this backtesting doesn't also include DXY. So if you guys also do a DXY analysis along with this while you're trading or analyzing whatever you're doing, you're going to be able to get an extra gauge on price. As if you see, for example, within the same session, if you see DXY possibly pose a bullish scenario where you have a fair value gap or something else of that scenario, it's going to really give you more confidence holding shorter within these type of scenarios. So again, this was episode 3 of backtesting currencies for the ICT silver bullet session. In this case, we are doing the London session. So if you guys enjoyed this video, please be sure to comment down below. Join the free Discord, is going to be in the description below as well. Subscribe, and I'll catch you guys in the next video. Peace.